Trading is hard. Hi, Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of June 7th, 2021, showing the chart of the SPY, which is the ETF for the S&P 500. And you can see Friday we had an up day and went up and challenged the all-time high. It's this purple line. The all-time high is 422.82. We closed Friday 422.60, a couple ticks off. So we have some momentum into it. The futures overnight are down though so far. If we look at CNBC, the S&P 500 is off, 0.17%. So we'll see how that plays out through the open. But you can see this all-time high, the record high, is currently a resistance level. Price went up to it, put in a record, went up to it early in the week, pulled back, went up to it later in the week, didn't go through it. So far a resistance level. And you can see the 50-day moving average has been pretty important support level for several months now. So I say trading's hard. Trading's always hard, to beat the market, make a profit better than the indexes. It's easier when the market is trending in a nice fashion. It's harder when it's going sideways. And right now, it's going sideways. So what's going to make it move? What's going to make it change? So I've put together kind of the big picture, what I think is going on right now. S&P 500 challenging a record high, like I said, showing on the chart, hitting resistance. We've got core CPI, consumer price inflation, on Thursday the 10th. That's a super big deal. You may have noticed that prices on lots of things are going up. Here it is. So on Thursday, core CPI is expected to be 0.4%. That's the projection from all the smart people. But you may have noticed that gas and lumber, have you bought lumber lately, and other things, and now meat with the meat processor hack last week, right? Just prices on a lot of things are going up. So if inflation comes in higher than projected, it's going to be a super big deal because the Fed is watching that, and a week later they're going to have their announcement Wednesday the 16th on what they're going to do with interest rates. And if they believe inflation is getting out of control, they've said they're going to be a little more tolerant than usual of inflation, but it could be a little bit more than usual. And they may decide to take action and raise interest rates. And so the market's going to be watching this. This Thursday is a big deal, and then next Wednesday is a big deal. And of course, we got the infrastructure spending plan. There's, a pile of money that is incomprehensible in play, and negotiations are ongoing. No decisions so far. Maybe later this summer. We'll see how that goes, right? The politics of that are super interesting. Earnings season isn't going to kick off till mid-July. Fastenal is kind of the new bellwether for that kicking off. We got some stragglers, but GameStop's going to announce earnings this week. That'll be a big deal for the meme folks, but for the overall market, not so much. Gold is still showing some pretty good strength. Gold looks like it's got some real opportunities and room to run. The volatility index, the Vix, is at a low for the year, and this is kind of interesting. The Vix is important, and let's look at it. Let's go over here. So you can see for the year, this is a 5-year look. Let's go to a 1-year look for now. So, COVID hit and blah, blah, blah last year. VIX was high. It's been coming down. We look at a 5-year. It's kind of resolving back to kind of a normal mean that maybe go down. So, how does that affect our trading? It's hard to say, right? Hard to say. But it is low relative to the last year, but kind of in line with the overall thing. So again, I think the big thing to watch right now is what happens with core inflation, core CPI, and then what the Fed's going to do. That's going to happen over the next couple of weeks. And currently, you know, individual stocks where there's news and change of information and stuff like that. I think that's where the plays are. Probably shorter term, they're the focus right now. Then we're going to watch the indexes. If the inflation numbers come in high, and if the Fed's going to do something to raise rates, you know, the market is kind of poised for a correction. You know, if they come in low, we could go on to new highs. That'd be fine. Rates come in high, or inflation comes in high. Now we're going to raise interest rates, right? Look how long this has been going up. Here's the S&P 500. You know, kind of here's the bottom from COVID. We've made an amazing run since then. It just seems like a correction could be in store given historical cycles. So we just gotta be safe, be careful, be disciplined, and then wait, keep some powder dry, and be ready for opportunities. Individual stocks, the play right now, and then we'll wait as this information comes out, and if something big happens, there could be opportunities on S&P 500, the NASDAQ, the Russell, the Dow, and gold. So that's where we're at. As always, the best thing is to have a trading plan, to be disciplined, and use risk management. Keep the winners big, losers small. Some trades you're going to lose. Keep that small, and then wait for the breakout trades, and they will come if you are disciplined. All right, take care, and that's it till the next update. Thanks.